A stock turns irresistibly hot when the perfect storm of momentum, volume, and market conviction builds pressure just right. It begins with a catalyst that acts like a spark, igniting widespread desire, drawing institutional money flowing in deep and swelling buy-side interest until the share price starts to pulse higher with unmistakable force. This catalyst could be an earnings surprise that exceeds expectations by a wide margin, a groundbreaking product announcement that reshapes an entire industry, or a regulatory shift that opens new doors for growth. Whatever the trigger, it creates an immediate sense of scarcity and opportunity that makes smart money want to get positioned early. Volume then becomes the heartbeat of the move, spiking dramatically on the initial breakout to confirm that the interest is not fleeting, but sustained and powerful. A stock rising on thin volume might tease a little upward drift, but when volume surges to 2 or 3 times the average daily level, it signals conviction that the upward thrust is real and has the fuel to continue. Technical indicators set the stage for this buildup by showing price action riding along key resistance levels, pressing against them with increasing intensity before finally penetrating them cleanly and decisively. The Relative Strength Index, or RSI, climbs steadily into overbought territory above 70, not as a warning sign, but as evidence that the tension has been coiling tighter and tighter, ready for a powerful release. Moving averages start to align in bullish formations, such as the price crossing above the 50-day line with the 200-day line beginning to slope upward, creating a visual picture of sustained upward momentum that feels almost inevitable once it gains traction. Fundamentals add even more fuel to the fire by demonstrating accelerating earnings growth, expanding profit margins, and powerful sector tailwinds that create genuine excitement across the market. When a company reports revenue increasing by 30 or 40% year over year, while margins widen through operational efficiencies, it tells investors that the business is not just growing, but accelerating in a way that justifies higher valuations. These improvements are not abstract numbers on a spreadsheet. They translate directly into the kind of scarcity that makes the stock feel hotter with every passing trading session. Sector tailwinds amplify this effect when an entire industry begins to benefit from broader economic shifts, such as falling interest rates that make borrowing cheaper for expansion, or technological breakthroughs that create new demand. As these forces combine, retail enthusiasm inevitably joins the party, driven by fear of missing out, or FOMO, which pours additional buying pressure into the name and pushes the price even higher. Short interest, when it sits at elevated levels above 10 or 15% of the float, adds another layer of intensity because any upward move forces short sellers to cover, creating a squeeze that can send the stock thrusting skyward in dramatic fashion. The hottest stocks do not simply rise in a straight line. They throb with sustained potential, building internal pressure through repeated higher highs and higher lows, until the eventual upward release feels powerful and almost overwhelming. This process of becoming hot is not random or mysterious. It follows a repeatable pattern rooted in supply and demand dynamics that have played out across countless market cycles. Early accumulation by large institutions happens quietly, with little fanfare, as they slide into deep positions over weeks or months, while the broader market remains unaware. Then the catalyst hits, volume explodes, and the technical breakout confirms what the smart money already knew. At this point, the stock transitions from a quiet buildup to a full-throated advance that captures headlines and draws in waves of new participants. The psychology of the market plays a crucial role here, because once a stock starts to feel hot, the narrative around it shifts from skepticism to euphoria, creating self-reinforcing momentum. Analysts raise price targets, media coverage intensifies, and social platforms buzz with discussions that only add to the swelling interest. Yet the truly scorching names maintain their heat through a combination of real business progress and technical strength, rather than pure hype. A stock that surges on rumor alone might spike briefly, but often fades when the pressure releases without underlying support. In contrast, the ones that stay hot over months or even years do so because every element aligns: catalyst, volume confirmation, technical penetration, fundamental improvement, and sentiment that keeps building rather than exhausting itself too quickly. Understanding these dynamics allows investors to recognize when a stock is entering its hottest phase rather than chasing moves that have already exhausted their potential. It is about spotting the early signs of pressure building, the subtle swelling of volume on up days, the way price begins to hug resistance before breaking through with authority. The RSI moving into overbought territory is often misinterpreted as a sell signal by novices, but in the context of a hot stock, it frequently marks the beginning of a powerful leg higher as momentum feeds on itself. Sector rotation can also turn an individual name scorching when capital flows out of one area and into another, lifting the leaders within the new hot group. For example, when money rotates into technology after a period of defensive positioning, the strongest names in cloud computing or artificial intelligence begin to pulse with fresh energy that spreads quickly. The key throughout is conviction backed by data, rather than emotion alone. When all these pieces come together, the stock does not merely advance. It throbs with the kind of upward energy that rewards those who recognized the setup early. The release, when it finally comes after an extended run, can be dramatic, but the buildup itself is where the real heat resides, creating opportunities for substantial returns if the position is managed with discipline and an eye on the ongoing momentum. Beyond the individual factors, the interaction between them creates a compounding effect that turns good setups into legendary ones. A strong catalyst without volume confirmation might fizzle, while high volume without fundamental backing often leads to sharp reversals once the initial excitement fades. But when catalyst meets surging volume, technical breakout, and improving earnings all at once, the stock enters a phase where every up day feels more intense than the last. Short squeezes add an extra layer of explosiveness because they force buying that has nothing to do with fundamentals, simply the mechanics of covering positions. This mechanical pressure can push prices well beyond what traditional valuation metrics would suggest, creating the kind of parabolic moves that become part of market lore. Throughout this process, the market exhibits a kind of natural rhythm, with pullbacks serving as healthy breathing room that allows new buyers to enter at slightly higher levels, keeping the overall uptrend intact. These dips often occur on lighter volume, signaling that selling pressure is exhausted and the path higher remains clear. Investors who understand this rhythm can ride the hot stock through its various phases, adding to positions on dips, or simply holding through the volatility, knowing that the underlying pressure continues to build. In summary, a stock becomes irresistibly hot through the alignment of multiple reinforcing elements that create and sustain upward pressure. From the initial catalyst that draws deep institutional interest, to the volume spikes that confirm conviction, the technical penetrations that signal breakout, the fundamental improvements that justify higher prices, and the sentiment shifts that add retail fuel and squeeze potential, every piece plays its role in turning an ordinary name into one that pulses with opportunity. The result is not a random spike, but a sustained, throbbing advance that feels powerful and almost magnetic to those watching the charts. Recognizing this pattern early separates those who participate in the heat from those who arrive too late and chase the move after the easiest gains have already been made. The market rewards patience and observation, allowing the prepared investor to slide into position when the pressure is still coiling and to benefit as the release unfolds over time. This is the essence of what makes a stock truly hot, and it has repeated itself across decades of market history with remarkable consistency.